There are three Medicare charges that millions of seniors over 65 are paying every single month, and a large number of them are not legally required to pay them at all. Not because of a loophole, because the programs that erase these charges exist, and nobody at Medicare picks up the phone to tell you. By the end of this, you'll know all three, exactly who qualifies, and the one form that can stop the biggest charge for good. And the third one on this list is the one almost no senior ever asks about, even though it can put hundreds of dollars back in your pocket. Stay with me, because the very first charge can be wiped out with a single phone call, and most people have no idea they're already eligible. Let's start with the charge that hits nearly every senior's check before they ever see a dollar of their Social Security. The Medicare Part B premium. In 2026, that premium is $202.90 every single month. It comes straight out of your Social Security deposit before the money ever reaches your bank account. Over a full year, that's more than $2,400. Here's what most seniors never get told. If your income is below a certain level, you do not have to pay that premium at all. There are programs called Medicare Savings Programs, run through your state, that pay your Part B premium for you. That $200 deduction simply disappears from your check. For 2026, if you're a single person with a monthly income below roughly $1,816, you may qualify for at least one of these programs. For a married couple, the limit is higher. And the most comprehensive one, called QMB, doesn't just cover your premium. It also covers your deductibles and your cost sharing. But here's the part that should make you sit up. Most people who qualify for these programs never apply. They keep paying the $200 premium month after month, when one phone call to their state Medicaid office could erase it entirely. And that's only the first charge. Because the second one is bigger, and it's the one Medicare quietly adds to your bill based on a number from 2 years ago. The second charge is called IRMAA. It stands for Income-Related Monthly Adjustment Amount, and it is one of the most misunderstood costs in the entire Medicare system. Here's how it works. If your income is above a certain threshold, Medicare adds a surcharge on top of your standard Part B and Part D premiums. In 2026, that threshold is $109,000 for a single person and $218,000 for a married couple. Cross that line, and your monthly premium can jump from $200 to anywhere between $284 and nearly $690 a month. Now, here is the critical detail that costs seniors thousands. Medicare calculates this surcharge using your income from 2 years ago. Your 2026 surcharge is based on your 2024 tax return. Think about what that means. If you were still working in 2024 and then retired, your income today might be a fraction of what it was. But Medicare is still charging you based on that old, higher number. You could be paying a surcharge meant for a high earner, when you no longer earn anywhere near that amount. And this is where almost nobody takes action. There is a Form SSA 44 that lets you tell Social Security your income has dropped because of a life-changing event. Retirement counts. The death of a spouse counts. Divorce counts. Losing a source of income counts. If you file that form and you qualify, Social Security recalculates your surcharge using your current lower income. The surcharge can be reduced or eliminated completely. We are talking about hundreds of dollars a month, gone just by filing one form most seniors have never heard of. You have 60 days from the date of an IRMAA notice to appeal. But even outside that window, if you've had a life-changing event, you can still file. The form is free. You can download it at ssa.gov or pick it up at any Social Security office. So that's 2 charges down. But the third one is the sneakiest of all because it's not a premium. It's a charge you get hit with at the doctor's office, and most seniors pay it without ever realizing they didn't have to. The third charge is your Medicare cost sharing. The deductibles, the co-pays, and the co-insurance you pay every time you see a doctor or get a service. In 2026, the Part B deductible alone is $283 a year, and the Part A hospital deductible is $1,736 for each benefit period. On top of that, Medicare normally only pays 80% of your Part B costs, leaving you to pay the other 20% out of pocket, with no upper limit. For a senior with ongoing health needs, that 20% can add up to thousands of dollars a year. Here's what most people never ask about. If you qualify for that QMB program I mentioned earlier, the Qualified Medicare Beneficiary Program, it doesn't just cover your premiums. It legally prohibits doctors and hospitals from billing you for those deductibles, co-pays, and co-insurance at all. That's right. Under federal law, if you're enrolled in QMB, providers are not allowed to charge you Medicare cost sharing. It's called balance billing protection, and it's the law. Yet thousands of seniors who are enrolled in QMB still get billed, and they pay it, because no one told them they were exempt. If you're in QMB and you get a bill for a copay or a deductible, you have the right to refuse it. You tell the provider you're a QMB beneficiary, and you ask them to stop billing you. If they keep doing it, you can report them to Medicare directly. This is the charge almost no senior asks about, and it's the one that can save you the most over a year of doctor visits, lab work, and hospital stays. So now you know all three. Let me show you exactly what to do about them. First, check whether you qualify for a Medicare savings program. Call your state Medicaid office, or dial 1-800 Medicare and ask about the Medicare savings programs by name, QMB, SLMB, and CHE. If your monthly income is anywhere near that $1,800 range as a single person, apply. Even if you think you might earn slightly too much, apply anyway, because several states have higher limits and some don't count certain types of income. Second, if you're paying an IRMA surcharge and your income has dropped since 2024, download Form SSA 44 today. Fill it out, attach proof of your life-changing event, and submit it to Social Security. This single form is the difference between paying a high earner surcharge and paying nothing extra at all. Third, if you're enrolled in QMB and you've been getting billed for copays or deductibles, stop paying them. Notify your providers that you're a QMB beneficiary and exempt from cost sharing. Keep your enrollment letter handy as proof. Here's the truth that ties all three together. Medicare is not designed to volunteer this information. The premium comes out automatically. The surcharge gets added automatically. The copays get billed automatically. None of these systems are built to tell you when you're exempt. You have to ask. And the seniors who ask are the ones who keep thousands of dollars a year that everyone else hands over without question. Before you go, here's the one thing I want you to remember. Every one of these three charges has a program or a form that can reduce or eliminate it, but every single one requires you to take the first step. Medicare will never call you to say you're overpaying. So pick the one that applies to you and act on it this week. If your income is modest, call about a Medicare savings program. If you recently retired, file Form SSA 44. If you're in QMB, stop paying those copays. And if you know another senior who's on Medicare, a friend, a spouse, a neighbor, share this with them. Because the people paying these charges are almost always the ones who simply never knew they could stop.